Right, good afternoon, folks, as we head into European, or should I say US trade on Thursday the 14th of September. Obviously got Europeans on my mind at the minute as we have just been through the ECB's latest interest rate decision, and Christine Lagarde's press conference is ongoing now. As I was just starting this video, she said that she is not saying that there is a peak in rates at the moment, but I beg to differ as of now. If we just jump across to the grid, we can see the reaction to it. You can see euro sold across the board. You can see equity futures higher across the board, especially European equities rallying hard post ECB, dragging US indices with it, despite some higher than anticipated US economic data just at 1:30, which kind of takes a back seat. But stock indexes across the board higher. You can see US equity futures higher, European equity futures higher, Asia Pacific equity futures higher. Bar this down 0.8%, 0.08%. Commodities higher across the board. You can see bond yields globally lower off the back of this. So clear dovish reaction to this ECB's hike, which we did in fact get a hike, but at the end of the day, it's not all about the hike. It's about what they say accompanying the hike itself. US dollar pretty mixed, some up, some down at the minute. We'll break that down in a minute. But your Aussie and your Kiwi higher, Canadian dollar higher, in line with oil rallying again, a retest of that ascending triangle and that round number of 88.50 that we did look at in yesterday and this morning's video. Sterling lower across the board, being dragged with it by the euro. Japanese yen slightly higher off the back of yields globally being lower, but main headlines is euro lower, European stock indexes higher, and bonds bid yields lower. So as we come across to the charts and have a look, no point in flicking through the headlines, as I mean, the headlines aren't really going to make too much of a difference to our life at the minute now, are they? The ECB did hike interest rates 4.25 up to 4.5%, the highest it has ever been since the inception of the euro back on the 1st of January in 1999. Right, an interest rate hike, I think it's positive for our currency, negative for our stock index, but there are obviously some contributing factors, as is the same with any ECB or any central bank interest rate decision. I would say you got to take the concept, you got to take the kind of situation, the current context, should I say, into consideration. 25 basis point hike on face value. Okay, the hiked interest rates, but there was a comment out within the statement that I think rings loud. She did just suggest that she has not suggested that this is the peak in interest rates, but there is a comment in here that she has reiterated multiple times in her press conference that the ECB says, based on its current assessment, the ECB considers that interest rates have reached levels that, if maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to target. Now, that statement, or that part of the statement, would suggest to me that interest rates are at sufficiently restrictive levels in order to return inflation back to target. So what does that mean going forward? She doesn't want to put a cap on it and say this is a peak, stocks will go through the roof and the euro will get hammered, but I think it's pretty clear in that statement. She did read that statement out 3 or 4 times and highlighted words within that statement, and that suggests to me that they are finished, right? There was a bit of to and fro. Would they hike? Would they not hike? The board was pretty unanimous in their decision to hike again, but that is seemingly it for the ECB at a terminal rate of 4.5%. Now, have a look at the reaction to that. We can see stocks higher, the DAX rallying off the back of that, which has dragged stocks globally higher. You can see this S&P, the Dow Jones, the Nasdaq not really doing too much, but the Russell rallying as well. You can see the euro stocks, should I say, the FTSE, all rallying in line with that. You can see euro getting hammered off the back of a little bit of a spike higher off the back of the hike, but then the algos, you have to imagine they read that statement or part of the statement, and then the euro sold off heavily across the board. Have a come across here, you can see yields lower. If I just switch this up to the bond and have a quick look at the German bond, you can see the bond going through the roof, which obviously then means if you go and have a look at the German 10-year yield, that is pushing lower. Again, another reaction suggesting that the ECB are finished with their interest rate hiking cycle. Now, What does that mean going forward? Does that mean you go long the DAX? I mean, it's long the DAX today. Interest rates being finished, or interest rate hikes being finished in Europe would suggest long the stock index, but they are still hiking into what we are expecting to be an economic downturn. Might be troublesome for the DAX, certainly in terms of the currency, right? You've had an interest rate hike, but that's seemingly the end of their hikes and potentially an economic downturn to come in the Eurozone. Both of them should be negative for the price of the Euro. So the Euro seems a good sell, maybe not right now at these lows. Any rallies again, I mean, the trend has been lower for quite some time. You have to imagine it will struggle to gain much ground. Any rallies probably should be sold back into, especially when you come over here and you have a look at US PPI consensus 0.4, beat to 0.7, retail sales consensus 0.2, expected to drop up to 0.6, retail sales excluding automobiles 0.4, 0.6, slight decrease on previous, but still higher than anticipated. Jobless claims lower than consensus, so positive data out of the US. If that is something that is going to continue, you had a few negative prints, but not massively negative, but economic data from the US now continues to be at the forefront. Trend on the dollar is up, trend on the euro is down. ECB done with the hiking cycle. Increasing economic data or increasing inflation in the or positive economic data and increasing inflation in the US should continue that move in euro dollar lower. So that's how we're thinking as we head towards the rest of the week. Last high impact bit of data until you get the Fed next week. Do we trend lower on euro dollar into that? We'll have to see. Michigan consumer sentiment, no high impact on every calendar you look at, is on this one. Retail sales though definitely is. So got the Fed next Wednesday evening. Euro dollar sold into them with the trend continuing, holding back against it. What do the Fed say next week? Do they signal they're done, or do they keep the door open to further hikes, which should continue that move in euro dollar lower?